All right. Hey there, everybody. Chris Franks with Texas West Capital coming at you live here a few minutes after 11 a.m. Central Standard Time on Friday, August 25th, 2023. Powell spoke today. And let me just check here to make sure you guys aren't telling me you can't hear me. Sometimes we seem to have that issue. But Powell spoke today at the Kansas Fed's summer symposium there in Jackson Hole. And so I've got some thoughts on that, and we'll talk about what that potentially means for the markets, stocks and the dollar and, crypto and whatnot. We'll take a look at some charts today. And man, oh man, hopefully we just get through all this. How y'all doing? Nevlusian, good to see you, man. Martin, I see you here as well. Man, it's been hot here in in Texas for a bit, but not for the markets, right? Well, I mean, Bitcoin's kind of been doing this sideways thing, and S&P has been rallying. Kind of what we're looking at there. Dollar's been a little hot recently, but when we look at what Powell said today, so if we think back to last year, what's going on, John? If we think back to last year, his speech, he was really, really hawkish, right? And so the market did like this 1,000-point nosedive. He was like, "Listen, it's things are terrible. We're really coming in hot," and he did, right? All throughout the summer there, and kept on with the 75 basis point rate hikes and whatnot. And so now we get here this year, and if you've been following me, we've been talking about how everything's been kind of cooling off, right? We talked about how CPI and PCE have been dropping. Jobs have been the only thing that've really been kind of there, have been kind of holding up. But as Powell mentioned in his speech there, average hours worked, average hour pay, all that kind of stuff has been dropping, right? Yeah, John remembers the last year the what they called the "there will be pain" speech, right? Yeah, exactly. But this year he was a bit more hawkish than I would have liked to have heard. But those who are in TWC with us, I had mentioned that we were likely to hear him say, "Listen, we're going to be here and we're going to make sure it gets done." He wasn't going to just go off and say, "Okay, yeah, everything's fine and dandy, we're just fine." But even if he was going to say, that things were looking better and whatnot, that I still expect him to say, "Listen, but you still have to be ready. We're going to do whatever needs to be done." And, really that's what he did, right? So a bit more hawkish than I would have liked to have heard, but overall, I think really his speech was much more neutral, right? Much more subdued. He noted that, inflation had been coming down. He noted specifically where it had been coming down, right? Especially like in car prices. And then he talked about the lagging effects, things that I tell you guys about all the time, right? We talk about the lagging effects of rents, or household spending, right? On your household, your rent, your mortgage, stuff like that, because of the way in which Fed takes it and the fact that rents are, leases are usually a year long. So they're a lagging kind of thing that comes in afterward. And so he noted that as well. Something that he's been doing lately, his at his other Fed speeches, right? He's been talking lately about how they've put in all these, big measures, right? Gotten really tight, and that it takes a bit of time to see that kind of play out. So he noted that, he's noted that previously in some Fed speeches, and today he mentioned that as well. He said, "Listen, we need to watch where this is going to go." Basically, what I understood from him was, "Listen, I like where things are going. It's not gotten where it needs to get to yet. Things could change pretty quickly, but for now, we like what's happening, and we have to see when the next numbers come in how they are." And that's basically what I got out of that. So again, much more neutral. A bit more hawkish I would have liked to hear, but much more neutral overall than I think what a lot of people probably expected, right? You can note that he spoke about PCE. I've talked to you guys about this so many times before. Everybody talks really heavily about the CPI, but the Fed changed to the PCE being their preferred inflation gauge, over a decade ago, right? So he brought it up again, talking about PCE coming up and how it's dropped and come down, especially core, but that it was still a lot higher than where they wanted to go. He reemphasized that 2% remains their target. People have been talking about, well, the Fed should raise it to 3% inflation and be done with it and be all good. But he said, no, we're going to go 2%. I think people are taking a little bit too much at the end there where he said, we're going to do whatever it takes. I think people are reading way too much in that, reading way too much hawkishness into it. I think that's just a reminder that, hey, listen, I'm telling you, things are looking better here and things are starting to look, a lot better than what they were. And I'm feeling, cautiously optimistic here, but I'm going to keep you in check by saying this, but a lot of people kind of get on with the whole, but I think that has to do with the way in which they think emotionally what the market needs to do, right? We talk about this all the time. We're not fundamental traders here, right? We're technical traders. We trade the charts, right? Because the fundamentals are in the chart. Now, sometimes we're not going to read them correctly, but they're still there. Other people who consider themselves fundamental traders, they come up with a theory, a thesis on what needs to happen, what the market should do. And that's the problem, because then it clouds the way in which you respond or the way in which you hear what's being said. So if I'm looking at it, the bond market itself doesn't think there's going to be another rate hike, right? Especially not next month. But at the end of the day, what the Fed is saying is, listen, we're not giving you any solid, yes, we're doing this, no, we're not doing that. And so that leaves some uncertainty in there. Markets don't like uncertainty. So when there's uncertainty, you can usually expect some volatility. The other thing to think about is usually the first response to Powell's speech is just like a knee-jerk reaction, and price really, it's just like this move, and then price turns around and goes the other way, right? So with today, we've got the dollar kind of rallying up a bit. We'll look at that chart. We've got Bitcoin kind of pulling back a bit. We've got, the S&P just kind of sitting neutral right now. So I think, we'll see how things lead into the end of the day. And then with next week, I think there's a possibility we could see things kind of turning, by that point. Let me kind of catch up with you guys here. I see a couple of you guys that join in. Hey there, Hank. Good to see you. He says ECB has already signaled that they might hike again after the summer. Yep. Mowgli, what's going on? And of course, if the ECB is going to hike again, and the Powell sits on his hands, right? The Fed sits on their hands and at least stays paused. I mean, again, that's the Euro USD, right? So you should see the DXY dropping, Euro rallying, right? Mark, what's up? Andrew, Bamboo, good to see you guys. Mr. Michael Johnson is here in person. Let's see. Onyx, what's up, man? Let's see here. Mark says, I think it should go back down to the target. Just allowing 3% has major ramifications for the nation. No, I don't know that really has major ramifications. Why 2%? 2% is just a number that they, you could argue is just numbers just kind of pulled out, right? But it's been the number they've been following for quite a while. I don't know that 3% really makes that much of a difference. You go, oh my God, but it's 50% more than 2%. And I say, well, but it's only 3%. I don't know that would necessarily be so great on that. Such a terrible thing. But again, we know that inflation has been dropped back. Now, Powell did note that that he might be seeing some kind of stiffening up. But here's the thing: we had big drops, especially in cars, right? We talked about that in car prices, right? We had the big drop over the last few months, right? Well, of course you're going to get a bounce out of it. You're going to get a little bit of a bump up. Things don't just go, as Hank likes to say, things don't just go in one direction, right? They kind of bounce around as it's moving in that direction, right? So, yeah, you could expect to get a little bit of a bump, a little bit of a bounce, and then it can continue in the other directions. I don't think that a bounce necessarily, that you have to be worried that, oh my God, it's going back up to the highs again as far as inflation goes. But if you're the Fed, what do you do, right? You kind of know that instinctively, but what do you do? Because if you're wrong on this one, then it goes up and it becomes more entrenched, and that is a concern. But if you do more, even though it's just a little bounce, right? And it's going to continue down anyway with everything you've already done, because as he noted, you've got lagging effects, right? And the unprecedented fast rise in, in the Fed rate and everything else. So, I mean, the one thing he didn't do was he didn't take responsibility at all. If you guys heard that, I mean, Jerome Powell, the king of no responsibility, right? He said, oh my gosh, this is unprecedented demand and supply, weirdness going on. And that's why we had all this inflation. Yeah. Anyway, it is what it is. He's going to say what he's going to say, but I was glad to see he wasn't overly hawkish or anything today, because I really don't think there was any reason to be, especially again with the lagging effects from last summer's, the start of last summer with all those strong, hard rate hikes. I think we're just now beginning to see them really. And so I think you got to give it a little bit more time to play out before you get more hawkish on it. Hanks is never a straight line up or down except last week for 4 minutes, right? Right. Let me kind of catch up with you guys here. Yeah, hit the like buttons, guys, and follow me if you're not. Whatever you're watching me on, Twitter, Facebook, whatever it is, YouTube. Subscribe to the channel, follow me, leave a comment. I'm always interested in hearing what you guys have to say. Don't be jerks. I mean, why would you do that? Embarrass yourself in public, right? I don't play those games. I don't have time for it. But, leave a comment. What do you think? How do you think it is? How do you think that he sounded today to you, right? Again, I'm trying to keep emotion out of this when we're looking at it as best as possible. And I think it's a lot easier to do when you're not a fundamental trader. I think when you're a fundamental trader, you really start creating a thesis, because you have so many interlocking parts of information that you have to go through, and each piece has to do something to the next piece specifically in a specific way in order to get to the next section, which has to do it again. And so you're kind of, when you're a fundamental trader, you kind of really buy into what you're saying, right? And it's easy to become really emotional. And all of a sudden, like I said earlier, from a psychological side of it, you start hearing what you want to hear. Y'all have kids? How often they hear what you actually say, right? The same idea, right? They don't listen really. They've got in their mind what they think is being said or what they think is going to be said, and that's kind of where they stick with it, right? Same kind of idea there. Let me see here. I'm just kind of catch up with you guys real quick. Garrett Quinn, good to see you, buddy. For sure, man. Let me see here. At what DXY level would you expect it to no longer dominate each and every market, but allow markets to find their own way again, independent of the USD? Well, I mean, all markets are separate, which is why they don't react exactly when DXY moves, right? The way I always look at the USD, so I look at the DXY. The way I look at the DXY is it is like the main rudder overall of things. But just how much a market does or doesn't react to what happens with the USD is in that market, right? So I always expect things to ultimately react with the general direction of the DXY. Okay. So if the DXY is rallying, generally I expect that to put, downward pressure on prices across the markets. If the DXY is declining, I expect that to take that pressure off. Now, just because you put the pressure on to take the pressure off doesn't mean that the prices have to rise or fall immediately. And depending on how long that trend's going, they might not at all, right? Depending on the market and what other, because the market isn't just the price, it's the demand and that supply, right? Now that is affected by price to an extent, but it isn't the end all be all, right? So for me, I always look at the DXY as this thing that kind of is this underlying kind of current, right? If we think of water, it's the underlying current that generally gives direction. But I think a lot of traders when they come in, and you've probably seen this, Hank, is they get really hopped up on, oh my God, the DXY dropped or the DXY rallied. So, oh my God, the stocks have to do this, or Bitcoin or cryptos have to do that. And that isn't really the way it is, right? There's going to be points, especially when you get toward the extremes, there's going to be points at which the DXY will keep heading in one direction, and you'll start seeing things kind of changing in the other direction than what they were doing. As you get to the point where everything starts to change. So that's kind of how I look at it, though. I don't agree. Yeah, I agree. There's nothing the Fed or ECB is really going to be doing about it anyway. They have to look like they're doing something. Otherwise, why do they have a job, right? But they tend to, I believe, and I still believe, and I always believe that central banks tend to do a lot more harm than good for you and me, for everybody, for all of us. So yeah. Let's hear Sats. What's up, man? He says, I'm curious if you could comment on the potential Bitcoin ETFs. Is there a formula for how much spot BTC that BlackRock, ARK, et cetera, would have to hold custody if the spot ETFs get approved? I'm assuming this will reduce the supply because they have to hold Bitcoin, right? If so, how much? So I think the better question is to ask, have they already been collecting? Have they already been accumulating? I think that's really the question, because I think the way your question comes across is like, okay, well, so I think, if they think the ETF's going to get passed, then how much do they have to get from now? Because we've got next month, we've got some decisions to be made, right? The SEC has to decide, are they going to decide, are they going to kick the bucket a little bit more or kick the can a little bit more? I don't know about a specific formula that you have to look at there. What we can assume is that, these are big names, BlackRock, ARK, these are really, really big names, guys. And so if they release an ETF, especially Bitcoin related, a spot one, the odds are they're going to have to hold a lot right now. My argument is that, again, these things don't happen. Retail traders tend to think that these things happen like immediately, right? That these things are always happening. Well, no. BlackRock didn't just decide the other day, oh, by the way, we're going to pop in an ETF, right? A spot ETF. No, this is probably years, in the making, right? And so they've probably been accumulating for a while. It's possible they could have been accumulating at the last, not the most recent one in June and November, but the previous one, right? They could have been at that bear market low picking up. They could have been picking up in 2018. They could have been picking up. That might have been a little early, but they could have started picking up some there at the COVID drop, but they didn't have to just start like tomorrow, or they didn't have to just start yesterday, right? My thought is, if they're applying for an ETF, then the odds are they've got much of what they already need. Because, if you're big like that, that when you say, hey, listen, we're going to put, when you put out that ETF out there, everybody's going to get excited about it. And the price is going to, people are going to chase price higher, right? And so if you're these big guys who have to get all this in, I mean, you're not going to wait until the last minute. You're going to have it done, ahead of time. Which, the other thing I have to then think of is what the heck's going on with Robinhood, right? So Arkham says that the mystery wallet, Bitcoin wallet, recently here over the last few months that accumulated like $3 billion worth of Bitcoin was Robinhood. So what the hell happened to Robinhood that all of a sudden they need to pick up that much that quick, right? Let's get off all the conspiracy. Oh, they didn't really have the Bitcoin they said they had, and now they had to fill it up and whatever. Let's get off all that stuff, right? But what is it possibly that Robinhood may know or may have heard that you don't? Because guess what, guys? When you're in any kind of transaction, there's always information. There's always asynchronous information, right? One side always knows more than what the other side knows. Okay. And it's no difference when you're in the market, right? Those that are bigger, like Robinhood or, BlackRock or whatever, they know what's coming. They know what's likely to happen, right? Same thing with congressmen and women, right? Especially if they're on the on those finance committees, right? And they're just these expert traders all of a sudden, right? Yeah. But they know things that you don't know, right? Because they're privy to the information, or they have connections to somebody who's privy to the conversations and what's going on. And so, yeah, I think when you look at it, I think these what do you call them? These ETFs. I think the companies behind them have acquired probably pretty close to what they need, if not already what they need to get it launched, right? They're not going to say, "Oh yeah, do it," and then it gets approved, and then have to go rush in and buy it, right? Because who's going to sell? Think about it. If all of a sudden, if it comes out tomorrow that BlackRock and ARK and everybody's approved, what do you guys think is going to happen? And we kind of expect the market to kind of jump, right? And so if they have to go in then and get it, well, crap, they're kind of screwed, right? So it doesn't make a whole lot of sense doing it that way. I'm Deuce. What's up? He said, Powell spoke a lot of words, but didn't say anything. Yeah, basically, right? He said, listen, we're kind of neutral. Things are looking good. Things are, they're coming good. Still got a ways to go. We're ready to jump in and do whatever it takes if we have to, but we need to wait and see what more information is coming in before we decide if we're going to do anything else. Yeah. Yeah, exactly. Let me see here. But yeah, it would, the supply, the available supply, right, is reduced, right? So let's real quick here, guys, let's talk about the halving. So I think a lot of people kind of misunderstand the halving. They think, oh my God. So, the halving comes up, and what that means is less Bitcoin's going to be produced, right? Okay, yeah, mined, right? Okay. But they automatically think that just because there's less supply, that means price has to go up. And that isn't the way it works, guys. You need the same demand or more, right? Or at least less enough demand that it doesn't overcome how much is being dropped off, right? If you have a decrease in the future production, right, it doesn't decrease what's already out there. We do that stupidly by losing it, right? An exchange CEO dies and nobody can get into the account. I'm talking about that guy up there in Canada, right? And all that stuff's locked up. We talk about the guy in what was it? Europe, I think the UK, right? He threw his hard drive out and went into the landfill, right? It had supposedly millions and millions of dollars worth of Bitcoin on it, right? These are some that will never be reclaimed. So, I mean, there is a natural supply reduction in that. But, it's not just simply, the supply drops and the price has to go up. You have to have enough demand coming in that causes price to go up, right? So when the halving comes, yeah, sure, future supply is cut, but that doesn't do anything for the supply that's already out there. Now, again, when you look at things like ETFs coming in, this is going to be, a grab that Bitcoin and hold it, kind of like what GBTC did, right? Though it's not an ETF, but what it's done, right? It's collecting Bitcoin. More or less what Saylor's doing. I mean, he did have the sale there, right? But, kind of collecting and holding. That's more what matters in terms of supply, I think, more than actually, cutting the supply in half. Who's grabbing it and holding it? Who's hoarding it? Who's getting more and more of it? And we're starting to see more companies that are starting to do that, right? And that's a big thing. So I think as far as supply goes, that's more important than the halving, right? But you still need demand, guys. You still need demand. If you don't have enough demand to push price higher, doesn't matter what kind of, limiting in future supply you're doing or what supply is out there right now, right? Does that make sense? Let me see here. Bob Dobbs, Subgenius. What's going on, man? Ever read Marcus Aurelius? You mean philosophical text? Yes. He's one of the things that I studied in my undergrad for my philosophy. Let me see here. Let me kind of catch up with you guys here. Let me see here. Yeah, going through Coinbase. Again, guys, I said this before. I think Coinbase is the big winner out of this whole ETF thing. Everybody's using Coinbase, right? So, again, we look at SEC with Coinbase and what's going on there, or Coinbase with SEC and what's going on there. I think that all becomes a big nothing at the end of the day with Coinbase, especially if an ETF is approved, spot ETF. I think that just strengthens Coinbase's position overall. But most of the time with the SEC, when there's big money involved, when there's a lot of people at risk, the SEC is going to give you kind of like a slap in the hand and have you pay a fine rather than shut you down, right? So we'll see. Let me see. Your buddy lost 6 Bitcoin himself. Yeah, we're always losing it, right? We're always losing it. Let me see here. It is a lot of Bitcoin for Robinhood. Yeah, I really do wonder. I really am a little bit, for once, I'm a little bit curious of why, because it was so much in such a short bit of time. But man, we'll see what goes on here, right? Anyway, yeah, so there we go. This is kind of my thoughts on Powell and what's going on there. Let's go ahead and pull up some charts here. Oh, what do we got here? Look at that. We got Bitcoin here, right? And so, potentially we've got this on some exchanges. We've dropped lower. I'm a big proponent of trading the chart you're on, guys. So I've got Bitcoin here on Bitcoin USD on Coinbase, and we've had basically a 90% pullback off the high there. So maybe, nothing's changed up to this point. Still 1 2 1 2, maybe 1 2 here, and we go up. But what we need is an impulsive breakout above this hourly pivot, which is about $27,000. If we can break out impulsively through there, we've got the big fair value gaps on the daily that should see it rally up to around 29,000. And if we're getting up to 29,000, I think it's all that you wrote. I think you can pretty much look for a breakout higher. Now, that doesn't mean it has to, because right now we are still sideways here. And so if we break down, initially, I'm looking at this hourly S1 pivot around 24,400 on this chart. And maybe a little bit lower there, maybe 24,000 area as the initial target, and then of course down here toward 22,900 at this high volume node. If we do, potentially we've got what amounts to a 1 2 and then a 1 with a flat A B, and then we'll get this would be basically like a 1 2 3 4, and we'll get a 5 down here dipping just a little bit below. And then we'll go up. Honestly, people are so bearish right now that I would prefer to see this dip down here toward this hourly S1 pivot, because that breaks down below the swing low here on this chart. And it breaks down, from where they are right now on the other charts. And doing so is really going to convince those people to sell. And then you can see a nice sharp move back up. But I think even if it goes from here, it would still catch them off guard. Everybody's kind of really looking for it to go down. I'm just looking for it to move one way or the other, waiting to see what goes on, right? If we break down further, then we reset the count here. A, B, look for C here, right? I've been talking for a long time about the possibility maybe we've got 1 2 3 4 5. I'm still not overly excited about that kind of the way that looks as far as a diagonal goes. But that could still be. And if we were to get down here toward 19 or 20,000, I think I'd probably lean that way. Toward that being a 1 and a 2. But really, guys, there's just nothing going on here. I mean, everybody is so like, oh my God, we dropped. We have to go to, back down and the November lows. We don't have to. We'll see if the chart tells us it's going to do it. But that's where I was talking earlier about fundamental traders. And now, a lot of people that are just really emotional, in their mind, it has to go down. So no matter what happens, it has to go down. It always has to go down, right? You've seen it all the way up here, right? Oh, it has to go down. 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 Oh, and they keep saying it. And every time since down here, at 17,000, every time it moves up, they say it's going to get rejected and go lower to 12,000, 9,000, something like that. Guys, I'm going to tell you, it's a lot easier to trade if you just stop with that nonsense and you just say, okay, what's going on? And now where is price going to go? If it breaks out here, where does it go? If it breaks down here, where is it likely to go? And then you trade that. Don't worry so much about, a lot of the idea that it has to go down lower here is for people that missed. They have no conviction in the rally, right? Because of this move down. But this all happened. The way they're talking here is the same thing that's happened every other time. If you guys were with us during 2018, you heard me talking about the same thing as we rallied up out of 2018 into 2019. And price kept doing opposite of what everybody said it had to do, right? Same thing here. So, it breaks down. We've got our targets there. If it rallies up, well, then we're looking around 29,000. And if we're getting up there, the odds are we'll probably break out and head up higher, in which case then we're still looking toward that 40,000, 50,000 area, as it continues to move up higher, right? Let me see here. Deuce says, I see an expanded flat screaming to touch 21. Why would it be screaming to touch 21? Why would it be screaming to touch 21? I mean, you talk about right here. I mean, you still got to get through this. You've still got to get through this. You've still got to get through this to get down there. Why would it be screaming 21? Right? Bitcoin has never had a macro wave pullback of less than 61.8 correction. Well, this would, as a flat, it wouldn't be a macro pullback, right? Just be local here. I think you'd have to look here as a leading diagonal to get what you're talking about as far as that goes. Because otherwise, it's a 1, 2, 1, 2 is a flat, right? So, if you were looking to pull down to 21 on this flat, you'd be looking at a pullback of, almost around, 21, almost 90%. You see? So, I mean, if it's a flat, I would expect it to be closer to these targets I've got here, which get you, around the, just around the 61.8 here and then the 70.5. Now, I mean, you could get the 78.6 here. It's around 22,000. They get you a low volume node. I could see that. But until that happens, I'm looking much closer up here. But, if we were to get 21, I think then we really are looking at this as 1, 2, 3, 4, 5 as a leading diagonal. And then we're looking at that as a wave 2 on that. And then that would get, there. I would agree with that. Yeah. Yeah. Let me see here. Just kind of catching up with you guys. Let me see here. Expanded flat with an extended wave 5 of C. Well, yeah, but I mean, still as an expanded flat, you would be here. A, B, and you're talking about a 90%. Remember, this is 1, 2 right here. So this is 1, 2, and then this is 1, and that would have to be a 2 as an expanded flat, which would get you a 90% pullback. I'm not saying it can't happen. I just, if we're getting that low, my primary becomes a leading diagonal here, because then that pulls you back off the leading diagonal. 21 would pull you back to around, right here around 65, right? So just beyond the 61.8, just prior to the 70.5. You see? So that makes a bit more sense when you're looking at extensions and retracements and whatnot. So, I'm not worried about it either way. It has done nothing here right now to make me worried that it has to drop below the swing low. So when we look at that, here's something else about that. I don't know if you guys have caught this. I've talked about this a few times. But we've got this Gaussian channel on the weekly here on the BLX. And every time it's turned green after red, it's been definitive that the low is in, right? The low is in, right? The low is in, right? It dipped down, but the low is still in. So we are green here for a few weeks. So the idea, again, past performance isn't indicative of future results, right? But the fact that it has happened every single time so far means that we defer to the likelihood that this is here. Not that we think that's absolute, that it can't possibly go down lower, but just that we have to pick a side. Are you going to pick bullish? You're going to pick bearish off the November swing low. Well, I've shown you guys lots of different ways to look at this, right? All saying that that's the low. Here's another way. You can't, you don't want to be, what's the word? Contrarian just to be contrarian, right? You don't want to be contrarian just to be contrarian. I think it's what a lot of people online on social media I notice are missing. They think, by saying, they're being contrarian all the time, that's what a contrarian trader or a contrarian investor is, but that isn't actually what it means. It doesn't mean you're just being opposite just to be opposite, okay? But, again, with this right here, you got to make a decision. What decision do you make, guys? Do you argue with everything? Maybe you're right. Maybe it goes lower. But if it does, that's going against all the different things that say it should be, the bottom should be in, right? So you're taking a big chance because the possibility that it drops down below is significantly reduced. Again, you can't say it's not going to do it, but you can't say in trading, the only thing that you can say that's going to happen is that you're going to lose money at time, right? It's all you can say. It's the only guarantee you have. See, trading is about choosing a position, choosing when you get into a trade, are you going to buy or are you going to sell? Or, choosing not to get in the trade. And part of the way you do that is you look at these things historically the way they've been, especially if it's been every single time. And you look there and you go, okay, well, what else do you need to happen to prove to you that the bottom's going to be in, right? But again, none of that guarantees it will be. That's what trading is. It's speculation, right? Speculation means no guarantees. It means you're taking on risk, right? Does that make sense? Abdu says, I wouldn't short, but I absolutely have orders parked at 21.5. Yeah. I think that's the way you do it. And here's the general way of trading, guys. If you're trading generally, here's what you need to remember, okay? Let me just grab this chart right here. Look, we are bullish off the swing low. This is bullish. So you shouldn't be looking to short. The reason people are losing money is because they try and short in a bullish rally, or they try to long in a bearish trend, right? Just go with the direction of the trend, guys. Just go with the direction of the trend. This trend, high, low, higher high, higher low, higher high, higher low, higher high, still a higher low. You should not be shorting. Now, when you get better at trading and, you can start doing that, okay. But most of y'all are not there, and so you shouldn't be trying to trade against the trend. Does that make sense? What's going on there, Brian? But I think if you think there's a possibility it could go down toward that 21 area, sure, put orders there. If that's what you do. Now, me personally, I don't ever set orders out there and just wait for it to get hit. I'm old school trader. I'm still hands-on. I don't, I don't like to just set orders out there and just wait for it to get hit or not get hit or whatever. That's me, though. All right. Have a good day there, Mark. Dan says you can't always be a perma bear or a perma bull. Sure you can. Everybody is all the time, right? I mean, if you want to be realistic about that, Dan, I would suggest that you can always be a perma bull on a large enough time frame, right? Because markets like Bitcoin, like crypto and like stocks are, they tend to trend. You want to look right, and they tend to trend up, right? Over time. There's going to be times where they pull back, but ultimately they continue to go higher, right? So, I know what you're saying there. I was just, I'm kind of a little tongue in cheek with it, but seriously, you can be a perma bull in the stock market, for instance, and you would be correct over 40, 50, 60, 100 years, almost 100 years. But yeah, I think it all just depends on your time frame. But I think when everybody stops worrying about being bullish and bearish and starts worrying about is price going up or down, I've talked about this a lot. Using the terms bullish and bearish are very emotional. So psychologically, they predispose you to grab onto that position no matter what and to hold on to it, no matter what the chart is showing you. And so if you jump around saying, oh yeah, I'm bearish, then you tend to look at everything bearishly, which means you may not actually be seeing what's really going on. And same thing if you're bullish, right? But if you just look like I was talking about on the other chart over here, if you're not bullish or bearish here, if you're just looking and going, okay, well, listen, I think this is what the count is, but I need to see an impulsive breakout above that hourly pivot to kind of get me on that way. Or if we get a breakdown here, I'm looking for targets of here or here, I think you just end up a lot better off as a trader, right? Because you don't have that emotional attachment to whatever price is kind of doing there, right? Let me see here. So, I mean, that's what we're kind of looking at there. Let's jump over here to the dollar, or the DXY anyway, here real quick. Where's my DXY chart? All right. So ultimately what's happened is, I've got this count. I'm kind of looking at the idea maybe we got a 1, 2, 3, 4 is a triangle and a 5. And then we got this move up, right? Now this move up has just hit the weekly pivot. So we're going to see, okay, now it broke out above wave 4 triangle resistance. So if the count is correct, then that means wave 1 is done here, or wave A, depending whichever way you want to look at it. And then wave 2 or wave B is in progress, right? May even be done here, okay? If it is done, it's not quite 38.2, but again, usually when you have a triangle, price is rejected within that triangle. Now this could still head up here. The top of the triangle is up here at around 105, almost 106, right? Wave A. So you can still grab that 38.2, maybe hit that low volume node area up here, that 105 and some change. But again, I said usually. That doesn't mean all the time, right? So my first thought is, okay, we're at the weekly pivot. Let's see, do we get rejected? We can see on the daily, RSI is getting overbought. Stochc RSI is overbought. 3-day, Stochc RSI is topped out and overbought. Weekly, overbought Stochc RSI. RSI is, we'll see how it ends. Maybe printing some bearish divergence here, but it's pretty close to that swing high every there. So, it may not turn out to be anything because it is so close, but, potentially getting some bearish divergence there. So yeah, when you're looking at it, 12 hours got a little bit more room to go there. RSI has been flat on the 12 hours since way down here at around 102.5. It's just kind of going flat here between, range bound between neutral and overbought, while prices continued, or the DXY there's continued to rally up. But I want to see what happens at this weekly pivot. Again, if we break out above there, I'm looking 38.2 and then 50. So I look at 105 and, 1.5 or so, and then 106.98. I mean, to me, there's nothing substantial here. It just looks like a first wave down and a second wave pullback. That's no big deal, right? So we'll see. Does it get rejected here, or does it rally up to one of those two targets? That's what we're going to be looking for. The daily is looking pretty hot at the moment. But we'll say, again, it could stay up there a little bit. But if we're coming back down through here and breaking back down into this descending channel resistance, that should indicate that we're heading lower then. And of course, we'll be looking down toward those probably those lower 90s there, at least on that. All right. Let me see here. So that's what we've got with the dollar there. Not really overall a whole lot of reaction, honestly, to Powell. I mean, you had a dip and then a rally, and that's it. And now, so here on the 1 hour, we've got bearish divergence showing right here, right? Because you got kind of rejected there. That's on the 1 hour. Is a 4 hour? No, nothing going on the 4 hour. And then, well, yeah, actually. 4 hour has some bearish divergence as well. Candles here. So, I mean, there is bearish divergence on there. However, the daily closes, we may end up seeing potentially some, well, no, we won't see bearish divergence on that. Well, this thing would have to close down pretty well here because it'd have to be bearish divergence over yesterday, which closed right about there, right about 69.4. So yeah, we got a doji forming up here, large upper wick, large lower wick so far. We'll see how that turns out and how it starts out next week to go there. But quite potentially could be done on that rally there, right? Let me see. E-minis. So E-minis potentially complete down here at swing low, or may have one more lower to go. We'll be looking here at the 38.2 at 43.35 and 3/4, and maybe even the 50% retracement 42.41 and 1/4 to finish out wave 4. But then I think we have our wave 5 headed up there toward minimum of 48.11 and 3/4, and that's just wave 5 of 3, right? That's just wave 5 of 3. You can see that the daily here is almost reset down and oversold. Again, wouldn't be surprised to see that dip down a bit further, but it's holding so far, right? It's holding so far. It does look like 3 waves up here. So you could potentially get a 1, 2, 3, 4, 5, somewhere between that 38.2 and that 50%. You got a high volume node right around, if it dipped down below the 38.2, right there around 42.89. And that would fill in this gap right here. This gap is Friday. Not overly concerned about that gap, though, because it's what we call a breakaway gap. You have this resistance right here. You have that boom, that breakout, and they often don't get filled. Breakaway gaps don't. So I'm not really saying it has to fill it in. I'm saying if it does go down there, it will do that. But again, overall, I think we're looking at further upside, right? Minimum 5,065 on the these are the S&P E-minis, by the way. One up there. Let's see here. Not that encouraging. Hank says that NVIDIA got stuck on the $500 target with the earnings they presented. Sure it is. 500 is a big round number. And if we look at, actually, I think I've got a NVIDIA chart here somewhere. Where is NVIDIA? There we go. So, it looks like potentially you got a flat here for 4. And then, it looks like it could be done. It looks like it could be done. If we look at the daily, we've got this bullish divergence up here. But it looks like 1, 2, 3, 4, 5 as a leading or as an ending diagonal, right? We'll see if it's ending or leading here. If it breaks down below 403.11, that'll say, okay, wave 5 is definitely done there. But Stochh RSI topped out and oversold or overbought. Yeah, all that volume that came in at the top there. Remember, it actually got closer. It almost got to 520, actually, right? It already got, it got to 520 in after hours when the earnings were first released. So, we were looking at 500 and then potentially 533. So we'll see what happens here. We do have a gap here, a weekend gap. That's got a low here of, you close that gap there at 432.99. But yeah, again, if we're breaking down below that swing low, then that says 5 is done, and we're looking to head lower there. I don't know. Again, this looks like an ending diagonal to me right here. Right? And so that pullback is 50% already. We're not really moving on Stochh RSI here. It looks like it might be done on that. But look at that weekly, though. See, the weekly candle looks ugly. Look at that. All this volume. This reverse hammer here looking thing, right? Looks like a shooting star. This is not what you want to see at the top there, right? But as I've told you before, as bad as these look, if it doesn't get any follow through to the downside, it just ends up clearing the way, and then you rally up higher, right? Again, that was what we looked at on Bitcoin there on the weekly. Let me see here. Back on the weekly over here, right? Remember this? And it doesn't look so bad on the BLX here. Well, that's the 3-day. That's why on the weekly. There we go. Remember this weekly right here? And all it did was pull back a little bit, and then boom, took off. So I don't want you to assume that just because the candle looks kind of like this is looking here, right? Just because it looks like this doesn't mean it has to be done. But, you know, we've had a big run up and there's a lot of volume coming in on that. So we just want to see if it breaks down below, it's done. If it, you know, if you start seeing some rally here and coming back up toward, you know, halfway up this wick here, it starts to get up to that 480 area, starts going. I mean, you might want to look at a breakout and all of a sudden, you know, this becomes some sort of one, you know, probably a 2 lower down here, right? And you're potentially looking up here at around 630, 620, 630 up in that area, right? So, you know, don't assume that just because it's like that, it has to go down, but, you know, be careful because often that's what it, you know, that's what it's leading to, especially when you've already got this big, you know, this nice rally up. Then you have that at the end with all that volume coming in. So, yeah. Mason, that's a good point. He says the candle on the Bitcoin was at a macro low and Nvidia is an all-time high, different scenarios. I mean, you could probably argue that. Let me show you here. But locally, this is the rally, right? This is the local rally here. And so that's what we're talking about, you know, the rally. You know, you're trying to make the point that, okay, well, because it wasn't the first leg up, you know, it's been rallying, that there's that. Yeah, and that's potentially something to look at, sure. But, you know, again, doesn't necessarily mean that it has to be, right? And I think that's the point I'm trying to get across, is that I just want you guys to start noticing things because a lot of times, you know, like when I first came into trading and started learning about candlesticks, right? I would always be told, oh, these are reversal candlesticks. Well, there's no such thing. Those reversal candlesticks are pauses. They're just pauses. They need to be confirmed by continuation, right? They need to see further decline. Yeah, because a lot of times you're just going to get this, right? You're just going to get this candle and then it's just going to barely move and it's going to turn around and go the other way. So if you're taught that these are reversal candles, you're shorting this, you got caught for no reason, right? There was no reason to get caught in that, right? If you're taught that dojis, you know, you got a rally here, right? And you got this doji here. If you're taught that that's a reversal candle, which is what you're always taught, well, guess what? If you went short there, you lost money, right? Again, doji here, right? Rally back up, rally all the way off the bottom here, all the way up here. Dojis are reversals, not necessarily, right? They're pauses, potential reversals, potential continuation. So yeah, you know, really that's the kind of point I'm kind of trying to get across there. As always, just trying to help, you know, traders understand that it's not as quick and dirty, simple as we tend to be led to believe when we first get in. Yeah. Let me see here. But yeah, no, it is a good point though, Mason. Yeah. You know, I mean, that is potentially something to look at. Yeah. Let's see here. Just kind of catching up with you guys here. Midwest Surface Refinishing says, I buy spot. Eventually, it should be worth more. Not looking to sell it. I'll trade to gain more cash up or down to then look for great shorts as hedges for being wrong. Randall Dance, what's going on? Good to see you checking in. We're going to catch up here real quick. I want some other charts I want to show you guys. We've got TLT here. TLT has been doing this sideways things, guys. Jeez, oh whiz. Look at this. I'm back over here, October of 22, right? So even right now, we're still here. 305 days of basically sideways, right? And what are we noticing right here on the move down? We're noticing volume expansion, right? So you guys can see that volume's expanding as it's coming down through here, right? It's fine. Sorry, you might get a bit of a bounce here, but I think we're going to see TLT breaking down. I mean, we're so close to that swing low there. And as I often talk to you guys about, you know, especially when using Elliott wave, you know, if this is a 1 and this is a 2, well, you know, it can retrace 100% of wave 1. It just can't go beyond it, right? But when you're getting to 85.4 or so, most often it's going to continue in that direction. So yeah, you know, you need to be prepared for a potential breakdown. I think this is the daily Stochar RSI up here and overbought. You know, I just, I think this thing's going to continue breaking down here on TLT here. Now, how much further does it have to break down? I don't know. I mean, if we're looking at the weekly here, the S1 pivot's down here at around 78.66, right? Which would take it to a new low there. Interesting how that works, right? We can see what happened here during the great financial crisis. We kind of had that shoot up there, right? And then coming on down here, I think it was March of 09 here was the stock market low. This thing continued lower after that. So here we are, really just kind of hitting this area here, and volume picking up the entire way on the way down. We had a lot. Look at the volume. This volume spike right here at the top. It's right here. So you see it coming down. We got another volume spike on this breakdown through support right here. This kind of support area. This candle on the breakdown is where you got a volume expansion. The next two candles, candle spreads getting larger. As the weekly goes, we've got an outside bar printing right now. And we do have a potential bullish cross. But, we definitely need to see this thing kind of make some moves. Probably, we really want to see it get above this 98.88. We really want to see it get above that to really start thinking, okay, maybe this may be a 1-2 or something with the low in there. But if I'm looking at this, just off this, I mean, I go 1, 2, 3. So to me, it looks like ABC. Maybe we're heading back down there. It is possible if this is a wave 4, you could have like A, B, C, D, and then E. And then maybe you get a 1, 2, 3, 4, and you get a 5th wave down just to get below here. And then it rallies back up. But I think you do get some sort of dip down below at least that swing low there before we get any kind of meaningful movement up, right? Yeah. If it does break down, we'll get a bullish divergence here on the weekly. Yeah. I would definitely be looking for that. That would be the time I'd be looking for that that long. I think right now, unless we're getting that breakout above that, again, this 101.9, unless we're getting a breakout above that, I'm really looking for at least a dip down a little bit lower at least. And then like Hank is saying, we're probably going to say a bullish divergence on this. But I'm not encouraged by this all this volume up here at the top. And then again, almost similar volume again right here. What is that? Because what does that tell us? That tells us there's a lot of supply still just kind of sitting out there, right? And what are you looking for in reversals? When you're looking to reverse to a bullish trend, you're looking for supply to kind of be taken out, right? Now, this could be a heck of a an accumulation range printing here, right? So you get, your selling climax down here, automatic rally, secondary test. You get what, it would dip down to become a spring. And then you get some movement up here, right? And with the length of time this has been going here, that would get, that should signal a reversal on that and really just kind of head on up. There really shouldn't be any two thoughts about that, right? So we'll look and see if we can get that little dip here over the next couple of weeks. But I think we at least get a dip. I don't know that we get to the S1 pivot, make some new all-time low, but I think we do at least dip down below. But that could be setting us up for some movement here. I just, you expect to get the volume up there. That's fine, at the beginning of the range. I don't like that you still had all this volume coming so close to what would be the spring. So if it does dip below that, we'd have to see what kind of volume we have coming out of that. But I'm not overly encouraged by the structure right now. Fall King Pepe, what's up, man? Am I a position swing or trend trader? Most of the time, I tend to be a swing trader. I do scalping a lot when I actually have the time to do it. That's usually what I am. I do have some. I do position trade from time to time, depending on if I feel we're at a macro low or a macro high kind of thing, right? So one point at which I'd be is down here at this low down here as far as a long goes, be positioned long for that, for a much further high, right? This area up here would be a short area. This is where I was telling everybody that it didn't have to be the top, but it was a top, because, everybody's getting kind of crazy with the eyes and everything. And, we looked at the target down here, which is where we end up hitting. And we just kind of went a little bit up there. Orthodox top, though, I think right there. So, yeah, I mean, as far as that goes, I'm not strictly one thing or the other, but I do tend to take more swing trades than anything else, just because with my time, it's a lot easier to do because I work a lot. So, yeah. Do you think price action in Bitcoin in 2023 has been more difficult than any year previous, or is this pretty standard? That's a good question. I really don't think it's been difficult. I mean, we've had very easy moves up, right? We've had these big easy moves up. We've been more sideways here. Well, I mean, this is coming from over here, but this is January, right? So this is January, a little sideways, and kind of down, and big move up. And I think that, I think you could say it's maybe been a little bit more difficult, especially if you're looking at intraday trading, but you have your bullish, or especially if you have a bearish bias, right? I think it's made it a lot more difficult to trade because of the overlap. But I think if you're zooming out to, the 3-day or the weekly or something, I don't think it's really been too hard to trade it. But again, that's where you look at, position or swing trading, right? If you're looking at day trading, it may be a little bit more, because most retail traders that are day trading are very bearish or bullish on the overall time frame, which may not have anything to do with their local time frame if they're trading days, right? Daily. So I think that's where the difficulty comes in. I think, Aeroquinn, is that when you have especially again with the rally up through from November, people having that very bearish emotional bias, and then jumping into the daily and trying to trade the daily with that macro bearish bias, emotional bias. I think that can cause a lot of pain, a lot of issue, because look at how crazy everybody was here. I mean, this was, if you zoomed out, right? Remember, you very clearly saw this as a wedge, right? I pointed it out with a throw under, right here at support. I mean, if you're not emotionally bearish, you should clearly see this and be looking along that breakout toward the top of the wedge, at least, right? And had you done it, again, it took less than a week to what it did, whatever this was, 2 months here. It took less than a week to kind of regain all that back, right? But here we go, breaking down here. And so now it just becomes a level by level thing, like I was talking about at the beginning. But, my overall, believing that this is the bottom and we're heading up overall, that has nothing to do with what I'm looking at locally here, right? Other than, maybe looking for some targets based on potential counts, that are based on that more bullish structure, right? But I would say, you think this was more difficult here on Deuce? A lot of people had a lot of trouble with this. This is what I'm talking about, right? But anybody that was with us, again, for me, it was pretty easy. And at the time, I think I even, those of you that were with me back then, help me out here. I think I ran an account up from like $200 or $300 up to like 80 grand or something in this rally here, right? Didn't I do that? I was showing you guys that. I think I did. I think it was that time period right there is when I did it. But, everybody's like, again, it had to keep going lower here, and it didn't. 4,000, it had to go lower. I was like, no, it's not. 6,000, that's it. It has to go lower. No, it's not. Gave the target up here. I think it all just depends on how used you are to the cycles, and to how, retail traders generally tend to trade. I think, if you understand that, it doesn't become as difficult. So, yeah. Oh, the correction. This right here. Yeah. This kind of thing right here. This is a long time overlap. Yeah. That was a bit more. Yeah. But again, the rally off the lows here was pretty decent. We did that live with our members, and, talked about where it looked like the bottom was in there at 48, 4,600, something like that. And, it was okay to go long. I did talk about the possibility that we could be having a flat on this. It was saying that, maybe 30,000 would be a reversal. And then, of course, we got up there. We got kind of up there, right? But it didn't. It didn't fall back down where it needed to go through the swing lows. And, as I always do, guys, I say, listen, here's what we're looking at. I think this may be happening, but if it goes through this invalidation level, well, then no. If it doesn't reach the validation level, then no, right? And so it didn't. And then we looked up higher and, we did all right. And that's really what trading's about, guys. It's not about knowing for sure what's going to happen every bit of time, right? We had a good read on this rally here, had a good read off the COVID low, had a possible 30,000 target there. That didn't end up working out. That's fine. Called this top pretty easily, and this target down here, we did well. Called this bottom pretty well when we were down here. So, as a trader, you're not always going to get it right. But I think if you can be more along what I continue to talk about, which is this idea that worry more about validation, invalidation levels than worrying about the overall being bearish or bullish. I think if you do that, it opens your eyes a bit more and allows you to be quite a bit less emotional, a lot more paying attention to actually what's going on. But even when you do that, people that are very emotional are still going to just read you wrong. They're going to hear what they want to hear, right? So yeah. Amdu says, I remember feeling sick to my stomach when I hit the buy button in March 2020 at 4,000. But you're glad you did? Yeah. And a lot of times again, guys, people say things, right? Traders like me and traders have been around even longer than me. We tend to say generalizations, right? We tend to say ideas, right? And that's not really good for new traders who come in because it doesn't mean exactly what it means, right? We say buy blood in the streets. Well, that doesn't mean when, well, how much blood? What kind of blood? Whose blood? Especially your blood, right? Or, buy, you should be buying when you're sick to your stomach. You may have heard that said a lot. Well, sometimes, if it's at the right point, right? It's not just because you're sick to your stomach, you should buy, right? But I think a lot of, retail traders, a lot of new traders are unfortunately hurt a lot when, by those kind of comments that we've made over the time, over the years, because they don't have the context for it, right? And then people spread them constantly, right? Which is why people are, I'm a contrarian trader, right? And all they mean is they're just being opposite just to be opposite instead of understanding what it really means to be a contrarian trader, right? That makes sense? But yeah, man, that's a good buy down there, 4,000 on that. Definitely had a good rally up. This is a pretty easy rally up, right? Not a lot of pullback along the way. If you were trying to get in, it sucked because you were always waiting for those pullbacks. Weren't really getting it there. Let me see here. Oh, let me show you some charts here real quick, guys. I got Riot here. It looks to me like Riot may be ready to turn around. So I've got this is the daily chart here. We're at the weekly pivot. We've pulled back just about 61.8 here. We're at wave 4. We're the high volume now. Everything's screaming that it is likely to potentially, to rally up here. So we're looking for this right now. Locally here on the daily, we're getting bullish divergence here off that swing low, right? So wave 3 would have a minimum expected target up there, 37.91, guys. Okay. So I think it's looking pretty good to get up there. If we're looking here at the Wyckoff on it here, it looks pretty good. We get the show of strength here. We get the pullback. Now we're looking to rally up higher. So I like that. Let's see here. Weekly Stochh RSI is about to close and oversold, which is fantastic. We've got bullish divergence here on RSI, or I'm sorry, hidden bullish divergence. So I'm telling you guys, I think Riot's going to be a good buy here. Coming into next week, we'll look for some rally up higher. But the confirmation is the breakout above wave B up here at $19.13. We do that. That's confidence count. Okay, we're headed up. That's just 3. 5 will be up here higher. That's minimum expected wave 3. So then my question is, well, if this is correct, if this count is correct on Riot and we get this rally up, what's your argument for Bitcoin continuing lower, right? So we've got Riot there, and I think it's looking good. I just kind of took a look at it here before the stream here, and I like it. I like the way it looks. I do have a Coinbase chart, I think. Let me see. What do we got on Coinbase here? All right, yeah. So Coinbase, same idea, right? If we pop this out to the weekly, here's your jump across the creek, right? And you have your back up the edge of the creek right here where we're at. It's a little bit easier to see on the weekly rather than right here. That's why I want to show you there. But yeah, again, we got a pullback, a 61.8 pullback or so. We may need to pull a little bit further down. I could see maybe a 70.5 at 66.77 maybe. Or worst case scenario, even down here at 61.20. But if Riot is just about done and Coinbase is potentially just about done right around this area, again, what excuse do you have for Bitcoin going lower when these Bitcoin adjacent stocks basically are going higher, right? If I look here, it looks like 1, 2, 3, 4, 5 maybe, and then an ABC. So I don't know. Do we get some rally up here? That's a 6 hour. And the 4 hour there, we're kind of up here, but with the Stochh RSI, but we got a lot of room. We can hang around at the top. It's done previously. RSI is just breaking out. So, can we hold this low here and rally up? If we can, that suggests that that wave 2 may be complete there. And that would give us minimum expected wave 3 up on 182.87. That kind of area there, which gives us a minimum expected larger wave 3 count up here at 208.96. So, yeah, kind of looking at that, right? DigiHost looks like it filled that gap you mentioned the other day, along with Riot, that may have a move up with the other blockchain stocks. Yeah, what is DigiHost? What is their? Oh gosh, we'll just do this. I'm gonna get out of here in a minute, but let me see. I'll have to look it up real quick. I don't remember what the ticker is. DGHI, there we go. Yeah. Oh yeah, what do I like about this, man? If I'm looking at this, potentially a bullish SFP over here through March, right? Potentially. The idea being we'd have I don't remember what I said last time, but it looks to me like we'd have a 1, 2 over here is a flat. So you get ABC down as A, ABC up as B. And then we're just working on C here. So whether it's done or, nearing it, I mean, we could get, we could try to get this fill in down here around that point, right? We could still try to get that fill in that gap at around around 79 cents. But yeah, if I look at this, first thing I'm thinking is this looks like a flat here. Looks like we're getting a spring on this range here. So yeah, we'd want to see how that plays out. Daily looks good. The weekly, again, it's got a little bit more it could go. So again, I could see that fill down there. But that weekly RSI is almost overbought. Stochh RSI has bottomed out and overbought. I'd be looking for a reason to buy on DigiHost, I think. Yeah. Michael says crypto stocks have been holding up better than Bitcoin over the past week or so. Seems bullish in his humble opinion. Yeah. I mean, again, if you've got a Bitcoin, basically it's a Bitcoin stock, right? If you're Coinbase, your business is Bitcoin. It is crypto, right? If you're DigiHost, if you're Riot, that's what your business is. So, how do you how does a stock continue to rally? And the asset that it's actually based on, right, is, for all intents and purposes, continues to drive lower, right? I mean, you're going to get those areas of time because it is a different product, right? Stocks are different than crypto, right? But so you're going to get those times where they're going to diverge a little bit at the extremes, more, is where it usually happens. But, they're not going to continue. You're not going to see like, these Bitcoin stocks are continue rally, and Bitcoin's just going to continue to go lower. It doesn't make any sense, right? So yeah, if I'm looking at, I'm not hating. I'm not hating it at all. I like that setup. But like I said, even if it comes down here a bit lower, I still like the setup. Let's say it was to come down there to that 79-cent area. We'd probably be looking wave 3 at 394, wave 5 minimum at 469. That's minimum. We can get over extensions though, of course, but yeah. And if we're getting up there, we're up into we're up into the meat of this sideways movement here, and so we're likely overall to break out higher, right? But yeah. I don't hate it. So, yeah, exactly. Michael says it's just more access from institutional investors, folks who are still worried about regulations. Yeah. And, and that's the other thing. Some people are like, oh, why wouldn't you hold Bitcoin? Why would you hold, MicroStrategy, or why would you hold Coin, or why would you hold Riot or something? If that's what you want. Well, because people want exposure to it without actually having to hold it, right? They just want exposure to it. And for, again, with the environment that things are at the moment, they may not be able to get into just holding it themselves, right? With the uncertainty, especially if you're a bigger player. So you can get some exposure to it without actually holding it, and you're okay then. You're not screwing up. You're not violating any laws. You're not violating any things that you have to worry about in your position in the company, right? To your shareholders, your investors. So, yeah. Anyway, guys, that'll do it. I can't believe it's Friday already. We got September coming up. I've got a pretty huge announcement coming up for TWC here, guys. So be watching, be following me. I'll post it out there, and hopefully exciting times for everybody. At the end of the day, guys, the only thing you control is how much you lose, right? That's it. The only thing you control is how much you lose. So risk management is the absolute most important thing you're going to do day in and day out as a trader. If you have not taken it seriously yet, you should. That's going to determine, whether you're going to end up being successful or not. If you cannot get the greatest traders in the world, guys, have awesome risk management, because you can't get to the point where you're staying in the market if you don't have your risk management dialed in. All right. So you guys remember that, get serious with it. Other than that, don't jump in just because there's a chance. Always look for a higher confidence entry. It means you'll take less trades, but it means the trades you take are more likely to win. So less losses, which means less time having to, recoup those losses, which means more time you can spend increasing the size of your account. Okay. So there you go, guys. Again, please hit the like button, subscribe, follow me, depending on wherever you're watching this at. And man, oh man, I hope you guys have an amazing weekend. Those of you in the mentor program, I will see you guys here in about an hour for our Friday session. And man, I guess that's it, right, guys? It's good to be back, and I will see y'all next Friday. Take care.